Good afternoon. It is August the 17th, 2016. Time to recap the trading for tomorrow. We came in this morning, and I'll show you another chart, liking the short side of the market. The reason we like the short side of the market was we had a B right here. Yesterday's action was a B. The overnight sessions volume was B pattern. The market did break and trade down and got to our number 2 buy area today at 2165.67. So the assessment that the market would trade lower was correct. We love our number 2 buy and we love our number 2 sell point. So this morning we hoped to sell 80 to 82, didn't get close to it. The trade was a sell on the opening or after the bond had opened. So the market breaks. We get the FOMC news right here on K period. Initial reaction was lower. The headlines were taken as more hawkish. Turns out when you read the body of the article, it's pretty much the same as the June release. A few more people were willing to raise interest rates, but only 2 voted as such. They were still confident the labor market was getting better and that we had modest economic growth, still worried about the impact of the dollar on our ability to export and the global economic situation. They're not talking about, but the real reason they're not going to raise rates is the presidential election. And they're going to do everything in their power to make sure that the Democrats at least retain the White House and maybe make gains in the Congress. So interest rates are on hold, in my opinion, until December. If we close it right here at 76, 79 to 81 is sell 1, 84 to 86 is sell 2. On the buy side, 70 to 72 is buy 1, and in the same area we had this morning, 2165, 2167 is buy 2. Looking at the 10-year, okay, we thought the treasuries might rally today because they've been sold down a bunch into the FOMC minutes. And we were correct in that assessment. We have an inside day on the F1, that's trading range, and F2 is going to show that too, if memory serves me correctly, at least on the 30-year. Okay, on our F2 screen we do have a B. Market did rally. K split right there was the FOMC minutes, and we got back up to the top of value from yesterday. Funny how those levels work, right? And in treasuries and currencies, you can fade them. We have news tomorrow. Jobless claims 265. Probably come in at that number. Plus 2.0 on the Philly Fed. That number could come in lower. They both come out at the same time. So they'll kind of absorb or each other. LEI up 0.2. No one pays any attention to it because of the interest rate component. Natural gas inventories up 29B. I'm guessing trading range, so we're going to sell failure to take out 8 to 12, sell 1, and then we'll make it 15 to 19 for sell 2. Going to take some help from the E-mini, I think, to really break us out to the upside. On the buy side, support at the buck, so 29 to 01 buy 1. And then 21 to 25 buy 2. Great day in the bond. Again today had some good trades in crude oil too. The bond just is a very, very big contract. Bottom of support was tested. We had support this morning at 28 to the buck. You were able to execute against 171 a couple of times. Worst fill would have been 71.06. And before the news hit, the market did rally up to 71.19. 19 to 23 was our sell zone today coming in, so it looked pretty good. Backup sell was 27 to 31. The high is 02. So again, having these numbers in your hands at 6:45 Central gives you plenty of time to incorporate them into your trading plan. Okay, first little band of resistance is going to be 71 to the buck. So 3 to 7, sell 1. And 11 to 15, sell 2. I see a trading range day basically tomorrow. On the buy side, first little band of support is going to be 16 to 20. So 9 to 13 is buy 1. And 1 to 5 is buy 2. Gold suffered today and after the FOMC announcement, but it didn't break either. So we're right here. If we put everything together, we're still dealing with a fairly strong P. Our number 2 buy area held up today at 40 to 42. This screen, the F1 says it could find sellers tomorrow. Looking at the F2 screen, and I'll split it out for the day session up into the FOMC, it was leaning B. And so we definitely have resistance above 60, and we've got a buyer against 40, and we're right now kind of in the middle, 1351. So first sell, 54.56, sell 1. 59.61, sell 2. On the buy side, 45.47, 50 may hold. We'll just have to see. Then our 40 to 42, pretty much where we were today. Okay, crude. Morgan Stanley said today was it. This was the last day of the rally. Now, the contracts are in contango. That means that the back months are higher than the front month. And the fundamentals for that is that the market is oversupplied this month, but it may not be next month. Friday will be the last trading day for the September contract. We will trade October in the morning at the close of business today. Change your screens to the October contract. My experience has been that short covering in the front month, rolling your shorts into the back month, or October in this case, usually leads to a couple of days of rally after expiration. So this rally could actually move into next Tuesday. And what move would screw the most people? The rally to continue. Higher low, higher high on our F1 screen suggest at least a retest of today's highs. Doing an A split right here. You can see volume is ever so slowly moving higher in the distributions. We're still looking at a P. We got this low volume number at 46.95. Get through that. Structurally, the next price is 48.39. Structurally, big numbers. So right now we're gonna look pretty familiar. We're gonna sell. Stops above 47, 47, 47 a quarter. We're going to raise our sell band by a quarter. And then we're going to go 47.50, 47.75. On the buy side, 46, 46 and a quarter. May take 50s to get in. We'll just have to see what happens at 47. And we may get that in London tonight. In fact, my guess is we will. And then 45, 50, 45.75, which is where we were this morning. We wanted to buy 46, 46 and a quarter, and I think the low is 45.84. A couple of really good trades in crude oil today. Hopefully we can do it again tomorrow. I think we can. Well, this has been the day of phone calls, and it's been the week of computer glitches. Had a couple of little things that screwed things up a bit. And last but not least, our beloved euro. Been very, very strong. And inside day today, trying to trade higher. 113.50 is where resistance is on this screen. On the F2 screen. Projected prices above 13 and a quarter. We're currently at 93. So here we go again. 113 even. Sell one. Sound familiar? Sell two. 13.25. Just take a deep breath. That's where it is. That's where resistance is. Maybe 113.10. On the buy side, 12.75. Here we are again. Makes it easy to remember our support and resistance points, right? And 12.50 for buy two. And that's it for this August 17th, 2017. We'll see you bright and early in the morning. You all have a great evening. I plan on one here too. And we'll kick it off in the morning and get after them again. I'm out of here.